Welcome to this week's special presentation titled, What Now? My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your presenter this evening. If you're a regular viewer of these presentations, you know that VectorVest advocates going with the flow. That means trading with the market's trend, which will do more for your trading success than any other single factor. That's why we've developed a market timing system to identify the current trends of the market. That system gave us the warning signals to protect our profits and play the market to the downside. Now with the market shaken and the color guard flashing red, the ultimate question is, well, what should I do now? Well, tonight we'll help you answer that question. We do make it easy. Our general guidance right here at the top of the home page, our market timing gauge, and our guidance. The color guard is neutral. VectorVest does not advocate buying any stocks at this time. And the market timing gauge is straight up in the yellow, showing neutral. The specific answer to the question of what to do now is really it depends, in large part, on your temperament or your style as an investor, and your trading strategy. You see, we come to the markets with different objectives and approaches. We call them your investment style and your trading strategy. Your investment style is defined by your unique combination of risk and reward appetites. Your trading strategy is an extension of your investment style. In VectorVest, we identify 4 styles. Let's diagram them on a table. On the bottom x-axis, we have risk, ranging from low to high. On the vertical axis, the y-axis, we have reward, ranging from low to high. We identify 4 investor types: conservative, prudent, aggressive, and speculative. Folks at the conservative end of the spectrum favor preservation of capital and are risk averse. Those who are prudent want better upside performance but don't want to take on more risk. Aggressive investors are happy to take on extra risk in an effort to get even higher gains. And speculators are at the top of the risk scale. They trade volatile stocks for explosive gains, rarely concerned with any fundamental considerations. So why am I telling you all this? Well, your investment style implies the kinds of stocks you'll trade and how long you'll hold them. Low-risk investors hold positions for longer periods. High-risk investors hold positions for shorter periods. The probability of your success is improved by identifying market periods that will sustain your trades. This is why we offer a series of timing signals to suit your individual need. Our market timing system and daily guidance provide exactly this kind of guidance: slow signals for long-term trends and fast signals for short-term trends. Here's a list of those signals from fastest to slowest. They're all rules-based. Of course, all long-term trends started out as short-term trends. In other words, the faster signals are more sensitive, you'll see more of them. And of course, they'll also be the first to signal at any change of market direction. So let's quickly review the rules for the signals themselves, and then I'll illustrate how the signals in our guidance played out in this last market turn so you can improve your trading system and you can put our current situation into its proper perspective. So in the interest of brevity, I'll show the rules quickly. This isn't a market timing discussion, but I do want to present you with the rules, particularly if you're new to the system. If you need me to slow down, just pause the video as needed. So our fastest signal right at the top of the list is the primary wave. Let's take a look at its rules. The primary wave looks at the week-over-week change in the VectorVest composite price action. The green light buyer looks for green lights in the price column of the color guard on the home page. The RTX kicker, the green light buyer RT kicker, and the green light buyer RT kicker combo signals all look for confirmations of those price lights with moving average crossovers of RT. The DEW signal is a technically driven signal, a nice middle of the road signal, and our slowest, most conservative signal, our confirmed call. Please note that the rules for the confirmed call do vary by country, so you can reference the special reports in the Views tab of the software to see the specific rules for your jurisdiction. Think of the market timing signals as triggering events, like a starter's gun at the beginning of a race. And you can be very successful with the trading system based solely on those triggering events. But you can really enhance your understanding of what's going on in the market and how to improve your performance if you couple those signals with our guidance. So I think it's helpful to see a time lapse of how the system works over time, and in particular how it worked over this most recent market turn. So here's a chart of the market timing graph. On the top graph we have the price of the VectorVest composite, daily candlesticks, 3 subgraphs for each of the components of our market timing system, the MTI, the buy-sell ratio, and the RT. Our story begins with this uptrend leading into January of 2020. We identified in our enhanced daily color guard reports and in the views that the MTI was above 1.5 and the market was looking toppy. We documented this on January 17th. And I can demonstrate that to you by going back to the 17th. Here is the strategy guidance we provided. We like to say we leave our footprints in the sand. The guidance said the MTI is above its historically overbought level of 1.50, and 3 of our one-day Derby winners were bearish today. These are not good signs. With one green light and an up situation, we're still bullish, but cautiously so. So this is strategic guidance as opposed to tactical guidance. Right? We're saying upside potential is becoming limited relative to the risk of a downward move. And we see that the price did pull back over the next 2 weeks before moving to the higher high. But we noticed that as the price moved higher, the MTI, the buy-sell ratio, and the RT indicators all hit lower highs. They moved lower. We documented this strategic guidance on February 14th. Our strategy guidance said, this bearish divergence suggests that downside risk outweighs upside potential. Indecision and volatility still reign, so stay tuned to the Enhanced Daily Color Guard report to stay informed in the week ahead. And I'll further note we're still in the up situation. The primary wave, our fastest signal, is still up. But indeed we did get our down signal, our first triggering event, on the 21st. The strategy that day said the primary wave has turned to down. Our other key market timing indicators, the buy-sell ratio, RT, and MTI, also experienced losses over the last 5 trading days. With the buy-sell ratio below 1, we'll need to see the price of the VectorVest composite move lower one more 5-day trading period to signal a confirmed down. For now, however, with 3 red lights and a down-up situation, prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market with a bias to the downside. So we changed our guidance for prudent investors to become defensive and aggressive investors to change their bias to the downside. We also had 3 red lights in the color guard. This was also the first day we highlighted contra ETFs in the timing presentation. So, what's the practical application here? Well, in context, we've been watching storm clouds gather since mid-January. We now have a tactical signal confirming a change in the short-term direction. So generally, the guidance is pretty straightforward. Everyone should stop buying new or replacement positions long. Aggressive investors should prepare to go short if the market and the stocks follow through lower. Prudent and conservative investors need to start paying attention. Too early to short if that's in your plan, as the intermediate trend hasn't turned lower yet. And specifically for you, you want to follow the rules of your trading system based on the tactical signal. The next day, on the 24th, the market gapped lower and continued sharply lower throughout the session. That night, in the Enhanced Daily Color Guard report, we noted that price action broke trendline support and was retesting that prior pivot low. Our next market timing signal, the DEW, also switched to down. Remember, we already had a red light in the price column. So what's the practical application here? Well, the DEW is an intermediate term timing signal. It's showing the downtrend continues to gain strength, and if you've adopted it in your trading system, it's time to take defensive or even bearish action. I would also have you notice how sharply price is moving. These signals are all rules-based and sounding the early warning. By the time we got to our confirmed down call on February 28th, the alarm has been sounded. Again, our guidance from the views. With our buy-sell ratio at 0.05 and our MTI at 0.46, we're currently at extremely oversold levels. Additionally, the price of the VectorVest composite is below its stop price, which is another classic sign of a deeply oversold market. With these conditions in place, it tells us that it's getting too late to add your short positions, as we know the next big move will be to the upside. Moreover, we see other classic bullish signs such as today's dragonfly candlestick formation and the top 5 one-day derby winners all being bullish and up nicely. With 3 red lights, prudent investors should not buy stocks at this time. Wait for a green light in the price column of the color guard. Aggressive investors and traders should be prepared to go bottom fishing and bargain hunting if we see an explosive rally. Again, the bottoming indicators are a strategic indication. The tactical guidance for aggressive traders is to get ready for a reversal. Prudent investors are waiting for a green light in the price column of the color guard, a slower tactical signal. And indeed, the market did take a nice bounce for the next 3 sessions before rolling over to resume the downtrend. That bounce was never enough to change the primary wave or the green light buyer signals. So only the most aggressive traders may have entered, and that's part of the game if you're aggressive. You need to be nimble. The rest of us are still trading to the downside or have moved to the safety of cash, waiting for the downdraft to end, and it will, because they always do. And that brings us to the present. So what to do now? Well, as of this writing on the 19th of March, the bearish bias is still in place. All the timing signals are aligned to the downside. The price of the VectorVest composite is still trending lower. If you want to participate, your bias should be to the downside. But the market is very oversold, so there's elevated risk of a reversal. Use your best risk management techniques to enter and manage your trades. If you're aggressive, that means you're still looking at shorting stocks, buying leveraged contra ETFs, or trading options. If you're more prudent, that means you're looking at non-leveraged contra ETFs or maybe 2 times leveraged contra ETFs to minimize that volatility risk. If you're more conservative, you're in cash, waiting for the storm to pass. Log off and relax. You've got VectorVest on your side. As do we all. So bottom line, follow our daily guidance in the views, watch our daily color guard presentations, follow us on YouTube, Facebook, and Twitter. It will enhance your understanding of how markets work, and of course, we'll be sure to notify you when the market presents a better buying opportunity. If you'd like to learn more, we offer a range of exceptional classes. Call us in product support at the toll-free number listed. You can also go to the VectorVest University to see our archived special presentations. But with that, I'll say thank you for watching. Have a good night.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.